In this month's edition of Accounting News, we decided to take a bit of a pause and just recap some of the material that we've covered today. In the next couple of months, we'll cover measurement and presentation and disclosure of insurance contracts, but we decided just for this month that we might just recap where we've got to today. Now, in the March and April editions of the Accounting News, we covered definitional aspects of insurance contracts. So talked about the idea about what features a contract has to have to be within the scope of IFRS 17. In the April edition of Accounting News, we covered credit card contracts and similar arrangements that would otherwise fall within the scope of IFRS 17, but they don't on the basis that the issuer of the contract doesn't specifically price the contract to reflect the risk of the individual contract counterparty. In the April edition, we also looked at the policy options available to entities that issue loans with death waivers and the prospect of them being able to apply either IFRS 17 or IFRS 9 to those contracts. We also looked at financial guarantee contracts and where they fall within the scope of IFRS 4 and IFRS 17. And in this edition of Accounting News, we take the opportunity to remind issuers that if they've previously asserted that a financial guarantee contract is within the scope of IFRS 4, they don't have a choice about transitioning to IFRS 17. They have to apply IFRS 17 to those contracts they've previously asserted are insurance contracts under IFRS 4. Now, for those entities that hadn't previously asserted that their financial guarantee contracts are insurance contracts, they've got the choice whether to apply IFRS 4 or continue to apply IFRS 9. This month's article provides a summary of the high-level differences between IFRS 4 and IFRS 17 measurement models, which give those entities that are transitioning from IFRS 4 to IFRS 17 an idea about the types of impacts that transitioning to the new standard will have.